Hey everyone, and welcome to today's Explainer. Right now, in 2026, the Midwestern city of Grand Rapids is pulling off an absolutely fascinating balancing act. I mean, we're talking about a city caught right in the middle of explosive billion-dollar economic growth, while simultaneously pushing incredibly hard to maintain community affordability. It's literally a tale of two markets. And honestly, understanding what's happening here, it gives us a complete masterclass in modern urban real estate dynamics. Let's dive in. To really grasp the sheer velocity of this market, we just need to look at one number: $420,000. According to Federal Reserve economic data, that was the median listing price in the Grand Rapids metro area back in May of 2026. Now, if you've been following the Midwest, you know that figure is a massive, massive hook. It immediately shows us just how fiercely competitive the residential housing market has become in what, used to be considered a quiet, sleepy manufacturing hub. But here's the thing, rising home prices like that, they don't just happen in a vacuum. It's directly tied to a massive infrastructural boom that's completely reshaping the city's skyline right now. Spearheaded by the economic development group Grand Action 2.0, Grand Rapids is seeing some truly transformational, capital-intensive projects come to life. And we aren't just talking about a couple of new office parks here. We're talking about the brand new $175 million, 8,500-seat Amway Stadium for our professional soccer franchise right alongside the state-of-the-art Acrisure Amphitheater. These are massive economic engines, and they're putting the city on the national map. And of course, driving real estate values straight up. So here's our roadmap for today. We're covering 5 key areas. 1, the Grand Rapids boom. 2, a fierce seller's market. 3, the renter's advantage. 4, investor hotspots and returns. And 5, building a balanced city. All right, let's jump right into part 1, the Grand Rapids boom. Now, to truly understand this boom, we first have to look at how economic developers and commercial investors are viewing the city's overall growth trajectory. There's a quote from Tim Ross, the Senior Vice President of Community Development at The Right Place, that I think perfectly captures the mood of 2026. He calls it cautious optimism. Because yes, developers are dealing with rising construction costs and inflation is hovering right around 4.2%. But despite those national headwinds, and despite tighter commercial lending, Grand Rapids isn't just leading development in Michigan, it's become a bright spot for the entire Midwest. Developers from down in the Sunbelt are actively looking north to Grand Rapids, asking, is this where our next wave of development is going to be? And you can see the physical manifestation of all that outside money coming in when you look at the timeline. Back in April 2025, we had the groundbreaking for the Amway Stadium. Fast forward to May 2026, and the Acrisure Amphitheater officially opened its doors with a huge concert headlined by Lionel Richie. Because let's be real, nothing says explosive urban growth quite like dancing on the ceiling, right? And looking ahead to the spring of 2027, the Amway Stadium is slated for completion. This rapid-fire succession of landmark projects is basically serving as a giant billboard. It's drawing outside money, new businesses, and a growing population straight into the local real estate market. Okay, shifting gears to Section 2, a fierce seller's market. Let's bring things down from that macro-level commercial development to the micro-reality for the everyday homebuyer, the ones just trying to break into this booming market. If you want to understand the buyer's pain right now, you just have to look at the inventory. Currently, Grand Rapids is sitting at roughly 1.2 months of supply. To put that into perspective, a healthy, balanced market between buyers and sellers, that typically sits at about 5 to 6 months of supply. So what does 1.2 months actually mean for a family out looking to buy a home? Well, it means a clean, well-priced listing in the city is seeing an average of 5 competing offers and going pending in just 9 days. It is an absolute sprint out there. And when we look at how this heat is distributed across the market, it gets even crazier. If we check out the pending to active ratio by price tier, keep in mind that anything over 100% means there are more homes currently under contract than there are actively listed for sale. Look at the entry-level tier, anything under $250,000. It is sitting at an astonishing 179%. The buyer frenzy is highly concentrated at those entry and core levels, where the demand just vastly outpaces the actual homes available. The core group from $250,000 to $500,000 is at 149%, and hey, even the luxury market over $500,000 is super competitive at 86%. Which brings us to Section 3, the renter's advantage. Now, earlier I called this a tale of two markets, right? Well, if the buying market is a frantic sprint, the rental market is an entirely different landscape. We have residential buyers facing median sale prices within the city limits that are up 10% year over year, with homes literally flying off the market in 9 days. But renters, they are experiencing something completely different.
Year-over-year rent growth is perfectly flat, 0%. And rental costs are sitting 18% below the national average. So you have this hyper-competitive buying market drastically contrasting with a highly accessible, remarkably stable rental landscape.
The median monthly rent in Grand Rapids as of mid-2026 is $1,595. Because this figure sits nearly a full fifth below the national median of $1,950, Grand Rapids has become a highly attractive haven. Think about it. If you're a young creative, a new professional, or a family moving in for all those new jobs created by the economic boom, you're finding that while buying a house is a stressful sprint, renting a great apartment is incredibly affordable and stable. Let's pivot to Section 4, Investor Hotspots and Returns.
So, out-of-state and local real estate investors are watching these dual trends play out, rising property values on one hand and stable, high-demand rentals on the other, and they are looking for yield. For commercial investors, the data is looking really solid. As of June 2026, multifamily metro, mid, and high-rise assets in Grand Rapids are yielding capitalization rates, which is essentially the expected annual return on the property's value between 5.10% and 5.68%. Despite tighter national lending standards, these cap rates show stable, predictable returns. Because the local economy is so diverse, driven by healthcare, education, and manufacturing, investors are really finding a shelter here from the volatility we're seeing in some of the coastal markets.
But here's the crucial takeaway. Investment success in Grand Rapids isn't about trying to time the broader market. It's really about picking the right micro-neighborhood for your specific strategy. If you want long-term appreciation and you can handle a high entry cost, Easttown is your target. If you want balanced returns with moderate entry pricing, Creston is the sweet spot. And if you're a hands-on investor looking for lower entry costs and you're willing to put in the elbow grease for value-add renovations, West Grand is exactly where you want to be. Finally, let's wrap things up with Section 5, Building a Balanced City.
So let's ground all this abstract data into physical reality for a second. With all this rapid investment in shifting wealth, how does a city actually maintain its soul? Well, the local government is actively trying to manage this boom to prevent displacement. Looking at the city's community development target areas, there are specific residential neighborhoods where at least 55% of the residents are low to moderate income. The city is using this exact data to laser focus their efforts. They are targeting these specific zones with block grants and support to ensure that the rising tide of the city's economic boom actually lifts all boats rather than just pushing vulnerable residents out.
To execute this, the city drafted its 2026 to 2030 Housing and Community Development Plan. And the goals? They're clear and they're aggressive. They want to prevent and resolve homelessness, aggressively preserve and create affordable housing, increase access to home ownership for locals, and improve behavioral health. By deploying affordable housing funds and federal block grants, the city is purposely attempting to balance out that aggressive commercial and residential price growth we looked at earlier. It is a concerted, intentional effort to keep the rental market affordable and make home ownership achievable again. So Grand Rapids in 2026 really is a masterclass in urban transformation. You've got billion-dollar infrastructure projects pulling in national attention, a fiercely competitive housing market rewarding sellers, a stable rental market sheltering residents, and a city government actively fighting to keep the whole ecosystem balanced. It's definitely not just a sleepy Midwestern town anymore. It is a dynamic, evolving real estate frontier. So I'll leave you with a thought to consider as you look at your own portfolio. Are you ready to invest your time, capital, or future in West Michigan before the secret gets entirely out? Thanks so much for joining me on this explainer, and keep learning.